I'll start off. I'm Marty Mecklenburg. I work for the City of South Bend in the Department of Community Investment on a team called Engagement and Economic Empowerment. And I've been sort of hosting these virtual sessions and helping coordinate the in-person sessions, which are coming up in May, one coming up in May, for a couple of years now. And we've been very, very lucky to have some talented folks helping us through this process and teaching us a lot of things along the way. First and foremost, Monty Anderson from Dallas, Texas. There he is right there. Monty's a longtime developer. I say this every time, but he's done all of the things, and he's also made all of the mistakes. So there's a lot to learn from Monty, and he's done some fabulous stuff down in Dallas and South Dallas. In addition to Monty, we have Bernice Radel. Am I saying that? I always feel like I say it wrong.
Radel. Oh, no, you say it right. That's the Buffalo A right there.
All right, Radel. Yeah. I can do that because I grew up, I also grew up in a border town with Canada, Bernice.
That's right.
Yeah. Bernice, like Monty, she's not from Dallas, she's from Buffalo, New York, but like Monty, has started from very little and has done a lot of fabulous things in Buffalo and has learned a lot along the way. And we're benefiting greatly from her experiences in Buffalo. So Monty, Bernice are going to sort of spearhead the presentation today, but we also have a local expert with us, Sam Centellas. For those of you who don't know Sam, I mean, this is his bio here, so I'm not going to read the whole thing. I met Sam when he was executive director of La Casa de Amistad here in South Bend. He left that role and took over the executive directorship of CDFI Friendly South Bend, which is Community Development Financial Institution South Bend. So Sam has been helping many entrepreneurs in the city figure out how to situate their businesses, how to get access to financing, and he's going to help us today talk about what we need to do to be ready so that we can attract that financing that we all need to get our projects done. So yeah, a quick overview here. So last month in February, we had steps 1 and 2, which we combined as Farming Your Community and Finding Your People. Again, that recording is online, so if you missed last week, it's there for you if you want to watch it. And we're going into step 2 right now, or sorry, this is actually step 3 in the program, which is attracting financing and investors. And as you can see in the slide, we have another virtual session in April. We do not have a virtual session in May because we have a real live session with Monty and Bernice coming to South Bend. So all of you who are on the mailing list will see that, but on May 6th, we're going to do an in-person workshop. We'll also have a networking event at that same time to meet and greet and collaborate. And then the rest of the year, June, July, more sessions, and then in September, another in-person one. We don't have to get into that all right now, but
and of course, Mike King with us in that session too. Mike's not presenting tonight, but he's here, and he's got some of the next ones, as you'll see. We switch off, and Jim Kuman will be also coming in the future. Jim Kuman, our 4th member of Neighborhood Evolution.
Right. So. Yeah. Right. The intention on these virtual sessions is to bring in the expertise from outside. That's typically Monty and Bernice, but also a couple other people like Jim Kuman. And we also have a lot of local talent here in South Bend, and we're trying to tap into that local talent as well to present. So without further ado, I'm going to hand the presentation over to, I think Monty is going to start us off by recapping very briefly last week, and then we're going to dive into the new material.
Right. Thank you, Marty. Glad you're all here. My favorite people in South Bend. I got to see some of you last week on a 20-hour trip I did real quick up and back. I wasn't even there 20 hours. So, but you can fly from Dallas to South Bend in 1 hour and 40 minutes. So, okay. So last week we did 2 steps. That's what, where's your farm? Where are you committing your life to? And I want to always go back to this one because it's really the one that creates the secret sauce of doing this work. And then number 2, getting to know your people. So we ask you to do these things here. Who are you? Define the area, draw your boundaries, commit your life to it. Write out the things in the flywheel that you're capable of doing. We're going to review that in a minute. And who do you have relationships with? What level of resources you're starting with? You got to either have, wealth, wisdom, or work. You got to have one of the 3 things to get going in this. What are the key features of your farm? what makes it special? What are your strengths? Stand on a corner and find out what's missing. What difference can you make? So who wants to give us just a couple of you? We'll have a time. Who did their homework and who can tell us a couple of things, a couple of really quick things, 15, 20 seconds a piece, maybe. A couple of you. Anybody raising their hand? I can't see, Marty, so somebody will have to see who's.
I would say if you have something, if you want to jump in with one of these steps, just unmute yourself and
Nobody did their homework.
Hi. Sorry. So my name's Bennett. I define my farm area as very narrow, like a very narrow region. It's like kind of maybe even a 1 or 2 block radius around where I live. And I have a vision that I'd like to see fulfillment, and I guess not going through all of them. I guess what I hope to bring are time and dedication, and a little bit of financing.
All right, thank you, Bennett.
And Bennett, where's your farm?
So if you know where the birthday chair is, I would say like a 2 block radius of that of the birthday chair.
All right.
great.
Mike knows where the birthday chair is, doesn't he, Mike? He made it. He put it there.
Yes, that was a for everyone.
Oh, okay. Yeah, that's right. I love that chair. Anyway.
That's great. All right. Well, thank you, Bennett. Who else did their homework?
Yes, I can share quickly. So I'm Skip. I graduated from Notre Dame in the spring, and I'm at Ohio State now doing Masters of City and Regional Planning. I guess for my vision, this is a pretty broad one. I'm really interested in improving walkability, bikeability, and mixed-use spaces in South Bend, and I think that incremental development is a great way to do that. And I understand that at a personal level, it's kind of more just about getting involved in a single house at a time, a single neighborhood at a time. So as far as the neighborhood, it's pretty broad right now, and I'd like to narrow that down. Right now, it's just kind of for South Bend. It's along. So the southern end would be along Angela. The eastern end would be Riverside. Western would be Olive Street, and north would be Lathrop, and kind of going more specific from there. So I just got into South Bend yesterday, and I'll be walking around a lot of that area tomorrow just to kind of scout that out before, because I'm over spring break, so I'm home for now. And then I guess what I'm bringing to the table, it'll really mostly be time. I think starting June 1st, I'll be done with Ohio State, and incremental development will be a full-time occupation. So,
Hey, Skip, this is Mike Keene. I'm going to be over at the local cup at 9 o'clock on Friday. If you're around, come on over and join us.
perfect. Yeah, I'll stop in. Thank you.
And
Right.
Skip, as somebody who started when I was just out of college, I'll say time is huge, but also hustle, so that's you just got to partner and find somebody with the capital, which we can help you figure out. So,
Awesome. Thank you.
love it. I love it.
Thank you, Skip. We have one time for one more, but what I'm going to tell the rest of you, if you've been doing this work, and if you will send an email to Marty about what you've been doing. See, when we come to town, Marty chooses, the people who get personal coaching that day, and we'll spend time with you when we come to town. So those of you that are doing the work and doing the homework, that's who gets selected for some of the work. And if you need us, he can also connect us with you beside, from tonight at another time. Also, we can do that. But one more person.
I'll
Anybody?
share real quickly. I define my area as Monroe Park neighborhood, which is very close to downtown. And I am doing this really to just do private development in a way that involves the community and the people who already live there. And so I live in the neighborhood. I have spent the last couple of years just really getting connected with neighbors and leadership in the neighborhood. And I have just recently acquired a few different buildings, so starting development on that. And the vision is to really offer affordability, exactly what the neighborhood needs. So thinking about and working with local entrepreneurs and folks in the neighborhood for the commercial spaces, and just making sure it's affordable in the area. And yeah, so I've been doing this in the neighborhood and really getting set up the last couple of years, and just acquired my first few buildings. So
Right. Thank you, Charity. So what we're going to do real quickly, each week we're going to review the past, because I don't want you to forget about it. And the reason that we've numbered these steps is so that we can move back and forwards of where you might get stuck and what you're needing. And so that's the reason that we numbered these, so we could get to them easily and talk about them. And so we're going to review where we went just very quickly. So finding your farm, committing your life to it, which is in the homework. Okay, doing the border, this changes everything. And this is the difference between us, okay, town makers, people that make money, right? We want to make money, but doing good is equal. Okay, we want to make money, but and most of the real estate people, and I'm not going to say all of them, but most of the real estate people in the country today are out there for basically doing financial architecture, whatever they can do to just make money without any concern about what it does to the neighborhood. So the difference between us is when you commit your life to a place, you're committing it also to your grandkids, okay, your kids and your grandkids. So it makes us think a little bit differently. So it changes everything. I always say the laws of the universe get in line with you when you make this commitment, and you attract money. You become attractive to money. So in getting to know your neighbors in step 2, these are the people that are going to loan you money. They're going to invest with you. They're going to do your plumbing. They're going to do your roofs. They're going to paint for you. They're going to occupy your spaces. They're going to buy your buildings from you. These are the people that are going to cheer you on. Not everybody's going to be a real estate developer. It takes a different kind of person. We need all kinds of people. We need lots of wing women and men. Okay, we need lots of wing women, and I have some really good wing people around me, and that's why I can do what I do. And so you're going to need so these neighbors, you're going to want to go to the places where you can find these people and get to know them before you need them. Make friends when you don't need them. Okay. And then I want to remind you of the flywheel. So if you're doing basically anything in a community, if you're cleaning parking lots, you're doing architecture, you're on the planning and zoning board, you're a city employee, you're running a church, any of these things, you can get into the flywheel. And what this means is that you're doing this work that you do on a daily basis. Let's say that I'm a janitor, and I used to clean buildings. That's what I did. I loved cleaning. I loved sweeping and cleaning buildings. So I would clean buildings all in my neighborhood. And then all of a sudden I found a building to buy. Okay. But I didn't go clean buildings in other neighborhoods. Okay. If I was an architect, I would say, don't work in other places, work in your place. You're going to find things, and that's how you're going to find the opportunities, and that's how you're going to know who the people are in your neighborhood. And that's how the flywheel works. Imagine doing one house. One of you mentioned it, starting small, doing one house in a neighborhood. It didn't have that great of an impact, but when you did the second house, the first house became more valuable. And then when you did the third house, the second and first house became more valuable. And Mike Keene and people working in that neighborhood up there, you've seen it happen there. It's happening where he's at. And that's how the flywheel works, just like a flywheel on a car, or what used to work on cars. I don't even think we have flywheels on cars anymore, but a flywheel is something that builds momentum. It's like the snowball rolling down a hill. So it started real small and then it goes fast. So so today we're gonna talk about finding some investors. A bank is still one of your best investors. A regular commercial bank, they're one of the cheapest. They're also one of the hardest maybe to do at the same time. So keeping it local, banks are a good place to starting point. And with that, I'm going to turn it over to Sam, and he's going to tell us about what are the things that we got to have to make us look good to a banker. So take it away, Sam.
Yeah, so hello everybody. I'm Sam with CDFI Friendly here in South Bend, and interestingly, so like Bernice, you mentioned hustle and making sure that that's something that you've got to bring to the table. What's interesting when I talk about finding a bank or someone who will finance you, part of it is finding out what they do. Many people that I've met in real estate and or small business that I work with, right, have hustle. They're hustlers. They're hustlers and dreamers. But I always tell people the one place you can't hustle and you can't out hustle is the bank. And so there are only certain things that they take and that they do. And so part of like the early research work that I do with small businesses and developers when I work with them is to figure, what are you trying to do? Are you trying to build affordable housing? Do you want to buy something that you're going to sell to somebody to own as a rental? What are the things that you're trying to do? And we'll go after a lender that does that. An easy example that we've done here locally is we've worked with a lender called Sinair, and they're a CDFI headquartered out of Lansing, Michigan, and they only fund affordable housing developments. So that's either ground up build or renovations to rent. So if you try to go at them saying, I'd like to do this on a project that I'm going to sell to a low income family, it's like that's nice and that's good work, but that's not what they do. So you could send them application after application and make it look as beautiful as you can, but they're not going to do it because that's not what they do. And so I always, encourage folks to one, start looking at what does the financial institution you work with, does your credit union do that type of work, do that type of lending? Who are you banking with now? And do they do this kind of work, and doing some research? So that's one, thinking about scope. And that's part of what we try to talk about, saying, well, we've got experience with different types of lenders. Here's what things that they're looking for. So into the details of what they're looking for. So Marty's got a list up. This is a great list. They actually have this on the South Bend, on the Build South Bend website. So you can see it in more detail there. We have something similar when we do presentations and work with people. It's about your application. And so one of the big things for me is trying to tell anybody who's looking for financing that you've got to have it pretty dialed in what you're looking for. So you'll see here on the list, they're going to ask for a lot of things. And those are things like, your bank statements, your tax returns, whatnot, but you've got to have dialed in what you're going to be asking for, right? So you've got to know, like, I want to buy for this, I'm going to renovate, here's my experience, right? You walk into a financial institution with that. I'll talk a little bit more about that, and I'll talk about this package for a second. But one, you've got to start putting together your tax returns for several years. You've got to start, and we've taught, Monty and the team have given a lot of advice around making sure you've got good tax people, making sure you've got a good attorney, right? So stacking all those things. But this is a great checklist of things that you're going to need. Every financial institution, whether it's a CDFI, credit union, bank, even investors are going to ask you for these things, because they're going to want to review if they think that you're what your credit risk profile looks like, and if you're somebody that they're able to want to invest with or want to do financing with. But it's clear, right? So these pieces we can help, and this is where we come in and we can help you say, well, let's look at stuff. How can we help you pull together? What are some suggestions? Maybe you set up a Google Doc or Drive that has all of your files there, so you've got them easy to access and readily available. What have you done to start putting together some personal financial statements? This is also where I think it's great, where whoever you're working with, most banks or credit unions or CDFIs will tell you, here's what we want to see on a personal financial statement. They'll even give you a template usually. So look at that and ask them, and they'll give you a template and you start working on that. And that's when then your mentors or somebody that you're working with could help give you, suggestions to what those things will look like for you and your development, whether you're first starting out or whether you're doing your 10th project. So they can help you fine tune what a personal financial statement would look like. The other one that I talk a lot about is, right, the resumes of your team and having those ready to go, having them polished. A lot of the places will ask, who are the partners in this project, or who are the companies that you're using? And so they're going to ask, what's your experience doing construction? If you're the one quoting out how much you think the renovation is going to cost in this project, they're going to want to see what your depth of experience is. And so all those type of research pieces are important. And a lot of those steps are where people don't think about. They focus on just like doing the research for the building and doing the research for what it's going to cost. And they don't spend the time to sharpen up a resume, to work on like a personal statement about why it is that you're doing development, your experience doing development, and tying in work. I've seen a lot of people tell me, I have no experience doing this. I'm like, what have you been doing? I've been in construction for 15 years. I was like, you have experience, right? So that's what people will help you craft a thing where you walk into the financial institution and say, hey, here's my experience, and how what I've been doing lends credibility to me as an individual, and it makes you somebody that they want to invest with. So I think I'm close there. I think the other one is that I always remind people is start putting this together before you need it. Literally, if somebody calls me and says, "Hey, I'm looking for financing. I got a deal. I got to try to close on as fast as possible." It's like literally, I'm like, I can't help you. Loan applications take a long time. It's a process. And so you've got to get these things prepared. Some of the products that we've been working with are lines of credit that get extended. So that way you've got something in hand that you can go looking for and say, okay, now I know I'm pre-approved for something, or I've got like, an established relationship with a banker who said, based on what you're doing, we could probably lend you XYZ. So then you can go out and look for XYZ and then bring that project to them to say, hey, I think we can fund this. So this is why it's important to this checklist, have all these things together, have a folder, have something online, have it all packaged so that when, an opportunity strikes, it doesn't pass you by because you weren't ready for it. And that's the kind of work that myself and others in the community are here to help somebody put together. So that was kind of my stuff to cover, and I'll hand it off next to, I think Monty's next.
Sam,
Bernice
Sam,
is next.
No, it's Monty's Monty. Maybe we'll see. I think it might be me. But
Bernice
Sam,
is next,
just wanted to ask you one question. Knowing that a lot of people are here in the renovation space, are there any things that you would recommend? I guess, like, what are any next steps for them? I mean, yes, get their stuff ready, but should they reach out to you? Do you have recommendations on some banks that might work for them? I mean, what would you like to tell them, if, for people trying to start renovating?
And so there's funding available at all levels. And what I've had several people that I've worked with saying, well, I already own a property and I'm going to renovate it myself, and I don't think I need financing for this one. Take out financing for it, even small. So take out a $15,000 line of credit to do some of your construction, right? Start building a credit profile that shows, like, I took out a line of credit for construction and I did it and I built up my credit. Most people in general, most of your first real estate deals, you're going to need to do on your own, kind of like any small business, right? When you're launching and doing your pilot projects and all that, you kind of got to do it on your own to prove you can make money doing it. And then people will invest more with you. And so this is a great way to say, like, oh, well, I'm going to self-finance my first project. Don't take out a small loan for it. And that could be in here in this market, right? $25,000 in renovations goes far. But if you've got the cash, use your cash to secure a small $25,000 loan, or take out a $5,000 or $10,000 loan if it's something that then you've got that on your record that you've paid that and it's gone well. I recommend that as a core part for renovation. The other one that I would say, and this is where I think a lot of credit applications with financial institutions struggle, is if you're doing your own renovations, you've got to find a way to validate pricing to the financial institution. They don't want to see, like, we think it's going to cost this to renovate, and you shrug your shoulders when you ask them for money. They want to see, like, how are you coming up with these numbers? Because the last thing that they want to do is loan you $50,000 to do a project that ends up costing $95,000. That then you can't finish and you can't pay them back. So they want to know, what do we need? What is this going to take? How do we get this done? And that's the biggest thing I see on the renovation side is, people just kind of guessing at thin air at what they think something going to cost. And if you walk into a bank and say, I can completely renovate this house for $30 a square foot, they're not going to give you a loan, because it's just not going to happen.
I have one thing that I wanted to add. When I first walked into the bank for the first time, and I had done lots of projects in cash, I actually brought I have it here with me, and you guys can't see it, but it's because it's a little tiny screen. But I actually I printed out a copy of a lot of the weird work I had done on the buildings that I owned, like pictures of me painting, my team doing windows, all kinds of crazy things. And it really helped. I actually walked into the banker I said, I've done all of this. And she was so impressed because I made this little booklet that I did online very simply. It was really easy. And I know, and to your credit, Sam, and I think that I wanted to point it out, a lot of people think that they don't know what they're doing, or they don't know how to do it, or whatever, but, or they say I have 15 years of construction experience, but I don't know anything about renovating. That's not true. You bring so much asset, and, and don't be afraid to show it off. I think, I mean, I've always felt like that.
That's right. That's a very good point, Bernice. And Sam, I was going to ask you if let's say today that I had the hustle, I got my paperwork together, but I don't really have any assets, and I've never really borrowed a lot of money, but I've done everything that you guys that we're telling you to do. We've done we've got all our stuff in order. We brought our photos. I've been doing carpentry work for a long time. What would you suggest? How would you suggest? And I'm ready, I've got a project. I just need the money for it, but I've got all the paperwork together. Is it possible for me to get a loan, or what would I have to do to get a loan?
So it depends. For those that have heard me talk about financing, I use sliders on a equalizer board as an example, right? And so there's like your credit profile and the asset and debt to income ratio. All those things are sliders in a little matrix, right? So assuming we can get things at a good place, there's alternative funding mechanisms. That's part of what CDFIs do. And I think one of the things that's hard is to understand that some of your initial funding is going to be more expensive. And that's, generally CDFIs are still cheaper than hard money, but it is going to be more expensive. So that's where I've struggled with folks that are like, I don't want to pay 9% interest. I was like, well, it's hard to get you a 4.5% interest loan on your first project or your second project.
Yeah.
It's going to be hard. So like, we've got to take it on this first project. It's just going to cost you more. You're going to prove it to them. You're going to, and then keep going. So that's one. The other one that I would say for folks is start things now, like look at local banks. I've been surprised how many people tell me they're like, I'm with Wells Fargo or Bank of America. Not talking bad about either. Neither of them have a branch in St. Joe County, right? So you can't walk in and see somebody.
Yep.
You should have your money somewhere where you can walk in and shake a hand of somebody. They can see your accounts. You can get to know them. And that when you're going to a loan committee, there's someone that you've had coffee once in real life who can maybe help stick up for you. Those are the things that'll help. That's why we try to do with the CDFIs. We don't have CDFIs local. They're all out of the area, but I'm your connection to them. And so like developing a relationship with me, with a local financial institution, with somebody else will give you like one more little quiver in your arrow, to try to get a deal, especially for your first deal done.
Okay.
It's so
So
funny.
any other questions?
Bennett
Any
has his hand
other
raised.
questions for Sam?
Bennett, why don't you unmute yourself and ask a question?
Thank you. I just wanted to follow up on that point that Sam raised about establishing a track record of getting a construction loan or a renovation loan and paying it off. I just bought my first rental property. My plan had been, I've got some cash saved up. My plan had been to use that cash to do the renovations. I don't need to pay the fees or whatever associated with the interest, especially with interest rates being what they are. That's the way I was thinking about it. But are you saying that in the long run, thinking about, since I'm going to do bigger projects, that I need to essentially take out a loan that I don't need and pay the interest rate on it? So I have two questions. The first one is it actually better to pay some interest rates, a high interest rate now, and establish the track record so that I have a lower interest rate on some larger project in the future? That's question one. Question two, or even can get the loan in the future. Second question is, on these kinds of loans, am I going to be penalized if, for example, like, would it satisfy what you're saying if I took out a renovation loan, got the place renovated, and then paid it off in cash?
Yeah, so two parts. I'll try to be quick on that. And I think one, I try not to give too much specific advice for somebody on like a general call, and we could follow up later. But in general, kind of general terms, I always try to recommend taking out some financing when you're in a position with some cash, because it's going to help not just your credit profile, right? Because maybe your credit is already great, but it's going to help show a future lender that you did it and it was part of a project. The other benefit around it is if you use the financing and then do that, most CDFIs, most credit unions, most of our local banks won't have early payments to pay it off fast, right? So you'll be fine there. So if you keep a loan for 6 months, the amount of interest you pay on it's actually very little, right? There's some there, right? But it's not a lot, and it could go pay off for you later. It also does keep your cash back, because then you're able to save cash to help secure future loans. I tell a longer story. I'll give the snippet of it. I was working with a small business owner that saved up a bunch of cash and wanted to buy a truck and a building for a construction business. He ended up paying cash for a truck, almost $75,000, but then couldn't get a loan to buy his building because he had no cash, right? And so it is part of where there's a cash game there involved in terms of like cash is king, and having some to help secure future credit can be helpful and show proof. But that's where I could help run numbers on what amount you take out and how long you pay it back and some of that. I also think the other one that I recommend for folks is to take out lines of credit. So you can get construction lines of credit. Places will do them as big, I mean, they'll do them huge, right? Millions of dollars for these big projects. Take out a $30,000 line of credit. You know, you may be putting a couple thousand on it at a time, paying it off and back and forth. Most of those you can get now at 9-10% or less. So it's like a credit card, but a third the interest, and it builds up your profile with future potential lenders.
One thing I could just quickly say, I swore when I got into this game, I would never take out a loan. And then I went and worked out a pro forma with Monty and Jim. And what I realized is that even though I might be paying high interest, I was making more money on what I invested using other people's money than not taking a loan. So that was sort of something that was aha to me. So if you actually work out the pro forma and look at it, it might work to your advantage to do it.
Yeah. Excellent. Excellent. This is excellent stuff. This leads us right into the next thing here, and that is, excuse me.
Monty, just real quick, Teresa, we'll get to your question at the end. There's a couple questions in the chat window,
Okay.
Monty. We can get to them.
We got a minute or two to take them. I just can't see them. So, and then Bernice will take it right on, because I think Bernice has got to answer a lot of this that we're talking about.
Okay,
And I'll answer in the chat on some of these too, if it's easier to do that while we.
Well, I think this is a question that maybe more than one person might have. So I'll read it out loud, Monty and Sam. Can property be considered as cash or equity in order to secure a loan if cash is lacking?
Yes.
Yeah. Real estate assets with equity, right? So are worth just as much as cash. Well, 80% what the value is, right? So there's a couple things, but absolutely having real estate. I would say in South Bend, though, the challenge is most vacant land is literally worth almost nothing. Well, depending where it is. And most banks generally won't take vacant land and or houses that are condemned. So like a condemned home usually has almost no value, if not sometimes negative value to your property. So it all depends, but generally a real estate can be used to lean against depending on the financial institution. So there's credit unions here in town that'll give you a loan on your truck and use your truck as equity. So there's a lot of ways to skin a cat.
Okay.
Sam is really laid out, you know, the details and the technical things that the bank has got to do. But Bernice is getting ready to tell you how to do this if you just had nothing and you're scrapping some things off the street, and where she's been from the start to the finish. So shoot, give us the real
Well,
here.
it's
Bernice.
funny because so hi everyone, I'm Bernice. If we haven't met, I can't wait to meet you in May. I've been there now twice. I love South Bend. And anyways, I have two examples. Okay. One is a bank loan, a bank to renovation loan, a renovation to perm loan. And then the second example is how I got an angel-ish investor partner. And so, because our job is to show you what banks can do, but also what investors can do, and kind of get your wheels spinning about structure of deals. So this actually leans on what Sam just said so well. I couldn't have asked for a better transition, actually. So this is my little pie shop building. It's 3 units. And when I went to the bank with this, I actually knew, I didn't know at the time, the loan committee, the people that reviewed my loan, I randomly ran into at a bar, and the guy, one of the loan committee guys, was literally dancing and smoking cigars at this weird cigar bar in the basement of some random bar in Buffalo. And I swear to you, that got me the loan. I swear, just because I saw him, bought him a beer and said, hey, like, great to meet you at the bank the other day, but now I'm here chilling with you and now we're friends. You know, it really does help. Okay, there at the end. So this is a great project to explain, because it talks about banks, and it talks about how I got the down payment money. Because everybody says, how do you get down payment money? Okay. So I bought this building for $85,000. It had a $60,000 renovation budget. It actually appraised originally at 125,000. I fought the appraisal. I got it appraised for $185,000. What that meant is that the loan would give, or the bank would give me 80% of, oh, you gotta go back, Monty.
Sorry. I'm sorry. I'm
Okay.
trying to do the chats. Go ahead.
No, it's okay. It meant that the bank would give me 80% of the after renovation value. So if you're out there thinking about what loans can I get if you want to buy and renovate a building, the renovation to perm loan product is something you should ask a bank if they do. Will you get, and this is the question, will you give me a renovation loan? So that way, when it's all done, they convert it to a permanent loan. And that permanent loan is typically 5 years, 10 years. It just depends on their terms. But that's what this is called, a renovation to permanent loan. Okay. So my bank agreed to give me 80% loan to value. I didn't need all of that money, although I probably could have used it because we were scrimping and saving to the end here. But my bank loan was roughly $120,000. That meant my loan at the time, this is 4.5% interest. My mortgage on this is literally $712 or something a month. It's silly low. But here's the thing, to buy this building, I needed to come up with 20% of the $85,000 plus closing costs. That's all the bank wanted. It wasn't 20% of the whole project. It was 20% of the purchase. And that's really a key piece here. And our banks still do this now, although they want 25% or sometimes they want 30. It just depends on the bank. But if you could, the purchase of the building was a lot less than the full loan because it's a renovation to permanent loan. Okay. They carry all the renovation costs. That's really key. So I needed about 28 grand with closing. And I said to myself, well, how do I pay this 28,000? And one of my employees at the time wanted to buy in. She wanted to invest back in the neighborhood. We'd been working together for a long time. And she said, well, I could take my HELOC, like my home equity line of credit. She offered to put up the $28,000 in exchange for ownership in the building. And I was like, heck yeah, let's do it. I literally did this whole project without a dollar out of my own pocket, because she put up the $28,000 out of her HELOC. So this is important. If you know somebody that owns a home, they have equity, they want to commit to the community or to you. If they can tap into that HELOC, now you've got your down payment. And now you've got the bank loan, right? So me and her, we went to the bank. I personally guaranteed, but we went to the bank together on a united front, and they gave us the loan without question. Our credit was good. We had all the money, we had the construction, etc. And it made all the sense in the world. It's an easy project for them. And then I put the rents down here so you can kind of wrap your mind around the rents. So the rear house today gets $950, the upper gets $910, the storefront is $575, right? So this estimated value is $240,000 in my neighborhood. I have my loan now is like $110,000 because I've been working it down, right? So and yes, I do owe that $28,000 to that one person because there's still a technical second loan on that, right? That original loan, but we've actually worked that off. We pay her off like a couple $100 a month, and this building still supports her loan and the bank loan and pays money and makes a little bit of money. It doesn't make a lot of money. I mean, we don't do this to be millionaires. I mean, I don't, but it does make enough money to pay the bills, pay the taxes, and if there's an emergency, I'm not panicked, right? We have some money set aside for emergencies. So that's a really great example of what you can do in South Bend. It's a renovation and perm loan. You're going to have to ask terms. You're going to have to ask about percentages down, but you can find this out there and make it sure it's an after renovation value. So that's one story. And then you can throw questions in the chat and I can answer afterwards. And then the second one is how I got started. So I'm 36. I've been doing this for 11 years. When I got started, I literally had just graduated from college because I was sort of a late bloomer, per se. I didn't go to college till I was 21. So I didn't graduate till I was 25, but I graduated from college. I knew I was working in real estate for 4 years in maintenance as a maintenance coordinator. We talk about the flywheel all the time. I was working in real estate all the way through my college experience. And when I got out, I said the difference between the people that own buildings and me is that they have money. I knew how to renovate. I knew how to deal with maintenance. you know, toilet issues and boilers going down, all the things. I've been doing it for a while. So I just like similar where you are all sitting, especially Skip, I'm kind of relating to you right now, if you can hear me. You know, I was 25 and I didn't know what to do. I just knew I cared about Buffalo. So I put together my little LLC, Buffalo Development. I got my little logo and I put together my vision statement, and I went sort of out in the hunt for money. And I got lucky, somewhat lucky, but I was in the right place at the right time, but I'm also wild. So it was like luck and also hard work. I find an investor, and that investor said to me, he said that he loved, you know, I said, look, I'll take your money, but I want to do good. So you need to like allow me to do good. I want affordable apartments. I really want to do some cool things in Buffalo. I want to put art in vacant lots. Like, you know, if we're going to align, this is what I want to do. And he actually gave me a structure recommendation. He goes, okay, you don't have any money, Bernice. This is what he said. He goes, you don't have any money. It's clear. You have hustle, you have time, and you have experience. He goes, what if I lend you? He goes, I'll put up 50% and I'll lend you your 50%. And he goes, and we'll be in a partnership for a long time. It won't be your traditional 3 to 5 years. It might be 5 to 8, etc., maybe longer. And he said, but what I'll do is, he goes, after they appraise and they start to gain value, we can pay off the loan, and we pay off my portion and we pay off your portion over time. And for me, you know, we talk, as Sam mentioned earlier, sometimes you got to like take a bad deal, right, to get forward. Well, 50% ownership in a portfolio of buildings that I didn't really have to put a dollar in, that's a great deal, even though it meant I had to work essentially for quote unquote free for a long time. I had to put a lot of my energy in. I had to put a lot of my effort. I had to, you know, I was painting the houses, you know, on the weekends kind of energy, but it worked out. And so that man and I, his name is Martin, we have been partners now for 10 years. And I have been paying off this loan. And we've bought other buildings together. You know, we did the first round, then we did a second round. And this is an example. This is one of our second round projects, right? I said to him, hey, I want to buy this big building. It was super vacant. It was green at the time. I said, it's $595. He wired me the cash. Like, it was so, you know, I didn't have to even do all the bank stuff. So, you know, and I put together a construction budget. I put together what I thought it would be after renovation. I told him I was going to rent the first floor, so I would be there forever. And he paid his 50%, and I paid my 50%, but he paid it for me. So that's a really interesting structure, that if you can find someone with money who's like an angel, right? Angel-ish, and they are out there. I promise you, they are out there. They are so out there. There are so many people out there that want to make money on their money and help people. But you know, again, it's basically, in a nutshell, this is a fully renovated building that, you know, makes a chunk of money every month, and all I do is pay down that loan. And I just want to point out that at the time when we bought this building, the appraisal process was really hurting in Buffalo. Like, people didn't think it was too expensive. The banks didn't find value. The appraisals were just so low. You're immediately upside down on projects, and so it made it really difficult to get any type of bank financing at all. But the upside now is I have this portfolio that is essentially to a bank owned out in cash. I have no real mortgage. So when my personal financial statement looks ridiculous, even though I have debt, trust me, I'm not trying to sound rich, because that is not the case. But, you know, on a personal financial statement, I have these buildings, I have this value, I have these equity, I have a partner. So to a bank, I swear to you, I get calls, a local bank brought me vodka once. They want my business. They want my money. You know, they want my projects. So you become more valuable over time and more desired, right? And so now they start working deals with you. And I'll tell you one last thing, I guess. I did these projects, with the angel investor before I did the bank loan, right? I had to show my worth, show to the community that I could do it, rent these apartments and get them and keep them rented, and show actual profit, you know, to some degree, that they were sustainable. And then the banks came, right? So you just keep that in the back of your mind. You sometimes have to sacrifice, you know, time or commitment or things like that, especially in the beginning, to then down the road get what you want. So anyway, so that, and this building is fully occupied. The rents actually are from $550 a month to $850 a month. It's affordable by nature. It's affordable by choice. You know, like, and that's the most beautiful thing about working in real estate is you can actually help the community. You know, this mural is dedicated to the Latino community. I am not Puerto Rican, okay? But I was the honorary Puerto Rican at the Puerto Rican Day Parade that year, because I said, you want to put a mural on my building? Hell yeah, let's go. No questions asked, let's do it. I was a little nervous just for maybe 2 minutes. I was a little nervous, but other than that, I was like, let's do it, you know? So anyway, those are two stories. So you can, when you think about structure, I just need you all to take a breath for a second, because you're going to feel so overwhelmed. You're going to say to them, how do I get there? I will tell you, I struggle with structure even to this day, but less. It only comes with experience and with even playing like on, you know, like find a building in your neighborhood and work out your pro forma and work out your income and expenses rough, you know, even if you don't own it, you have to keep practicing and practicing. And as you get experience and as you learn from other people like Monty, Mike, myself, it'll start to make sense. It will. It's hard, but it starts to make sense. So don't be afraid of structure. Realize that it's your friend. And that as long as you advocate for yourself, and, you know, and every deal is different. Every deal, I mean, lots of deals can be different. Also, lots of deals can be the same. You can find something you like and you just go and you keep doing the same thing over and over again. That's up to you. But just don't be afraid. Just take a breath and know that we're here for you to help you out with structure. So that's all I got.
Hold on. Thank you. Thank you, Bernice. So Bernice, I want to ask you something. So
Sure.
if you were, is it easier today now that you've been in it for 10 years?
Is it
It's still tough. Is it still tough to get money?
it's still, well, it's tough to get, I think it's tough to get money, but different. I would say it's easier in some ways and it's harder in others, right? It's sometimes amazing to know what you don't know, to not know what you don't know, right? Because you just jump in and you know, you're naive in a way, and it makes you do wild things and amazing things. But it gets easier. Yeah, I can run a pro forma in 5 minutes, just like what Mike just said. Mike said he can put his documents in a row and send them out in seconds. And I'm the same way. I worked on a pro forma on Monday. We walked through a building 2 days ago with one. I set up the pro forma that same day. I emailed it out today to a partner, and I said, hey, here's the deal. Like in a matter of a couple days, we have this is another project, but yes, yeah. But it's hard too. To me, I'm sorry, maybe I shouldn't. I don't want to say it's always easy. You know, Monty.
So what happens? Other questions for Bernice, but I want to know in just a minute though. What do you think? What's changed with interest rate right now? What do you sense has got to happen to you?
Well, I would say so. Interest rates now, like my pie shop was a 4.75, and now if I was to refinance that, which I'm going to need to, right? My 5-year loan is coming up. Well, I can't believe it. You know, that pie shop's been open 3 years as of today or yesterday or one of these days, you know, so 3 years old, but pretty soon I'm going to have to refinance, and refinancing has been tough. Your floor is 6.75. You have 25% down, not 20. And you're just going to have to start to prepare more. You need more cash up front. So you guys have to really make sure that you're running your numbers, and like what Sam said, you're really thinking about construction costs, and you just have to make sure of these numbers. And if you don't know them, partner with people in your world that can help you. Do not guess that the roof's going to cost $20,000 to replace. Don't guess. Get 2 or 3 bids, or call a couple of roofers. You know, like it's so you can be the better you can. Hope is not a plan. Hope is not a plan. You know, you can hope, but you need to make sure you have those numbers together.
Right. Other questions for Bernice? Anybody?
There's a question in the chat window. Can you see the chat, or do you want me to read
I can,
it?
yeah. Teresa, who would be a good, Teresa said, who would be a good resource if looking to find builders looking to build and create affordable community housing development in St. Joe County? So what would be a good resource? Thank you, MJ, for that. I mean, I don't know. Can somebody say there's
I mean, the thing is talking to some people who are trying to be in that space. Right now, it's really tough. You're not getting much of a deal, whether you're building affordable or not. You just have to figure out how to do it. Right now, we're looking at $220 to $250 a square foot for residential buildings, whether you're the near Northwest neighborhood, which is a CDC not-for-profit, or you're a private builder, and it can go up depending on what you want. There are some builders. If you want to give me a call, I could share a few names of folks to talk with. But once again, it's a matter of getting to sort of create a relationship with some folks and find somebody you can trust. And probably it depends on the size of the project. If you're trying to do a big project, you're going to need a larger builder that's going to cost you more money. If you're looking at a smaller project, you might be able to get a smaller shop. And what I'm understanding from some of the builders I'm talking to is that some of my builders are now starting to get calls from other people asking for jobs. That didn't happen a year ago. So there might be, a little light up going on in the demand market. I don't know.
Yeah, there is for sure. People are definitely slower. I also want Consuelo asked about the mural, and I actually wanted to tell, if you don't mind, I'll just take a second to answer that question. She asked about the mural, the painting. And I'll tell you, one of the coolest things you can do when you own buildings, if you can, is partner with artists, because artists make your buildings and your places more beautiful, right? So every project I do always has a do good budget. And in that do good budget, I might do a picnic table or a bird. It depends on the budget, actually. Sometimes it's $200. Sometimes it's a lot more. And in this case, I was able to partner with the Albright Knox. It's our biggest art gallery. They are doing these murals all around Buffalo, and they asked me if I would do it, and they would do it entirely for free. Now I had to do some building improvements, about $8,000 worth of building improvements for the windows and make sure that everything would adhere. But it was a write-off, and I had to do it anyway. I had to repoint some of the brick. I had to, caulk some of the windows, all the things. So it ended up working out in our favor. I got a full paint job for essentially for free. So and as you see this, I hate my mansard roof. I hate that brown roof. I hate it so much. But if I really want to keep the rents reasonable, again, if I do a full storefront facade renovation, I have to pass that cost on to people. And so I would rather say, you know what, that'll be phase 3. Phase 3 is the storefronts. Phase 1 was buying it, renovating it. Phase 2 was the mural. Phase 3 is and that's okay. That's what incremental is, right? Not everything has to be perfect from day one. Momentum builds momentum. That's like a Monty quote. I've said that so much this week. You just have to keep your momentum going and work it out. And I'll tell you, can I tell you one more investor? Okay, last thing. I promise I'll shut up. This is a huge thing to tell you about investments and investors. Investors are normal people. And the number one thing I do with any person that comes to town, especially if they're from New York or wherever, is I take them out to eat. After we see the buildings, I take them out to eat. And I specifically take them for chicken wings because Buffalo made chicken wings. It's like they were invented here. So I always take my investors out for wings. And there's nothing better than seeing them covered in wing grease all over their faces. They're worth millions of dollars and they're just slathered going, nom, nom, nom. This is, but I swear to you, food is life, right? Food is like the heart and your soul. And so when you can show them what you can do and then combine food, for some reason, it always works for me. Anytime I don't take an investor out for food, I swear to you, I don't get it. I am 100% of the time. If I don't take them out for food, I do not. They say, we're not really that interested. But when I take these people out for chicken wings, it's on. So just a little side note, don't be afraid to be loving and caring and yourself and, show them what South Bend is all about.
Yeah. Well, thank you.
Right,
very
Monty?
much. Thank
Would
you
you
very
come
much.
invest in Buffalo if I took you out for chicken wings?
You would have to take me out for chicken wings before I would, for sure. You would have to. And that's another reason we got to make this trip. So everybody at South Bend that wants to make the trip to go see Bernice, let's do that soon. It's really good to come and visit each other. So thank you very much, Bernice. That was very good. It fit right in with Sam and And, you know, there's 100 stories. Bernice could tell you stories all night long of different things. So take advantage of her when you get to see her. So next, I'm going to show you a loan package that I do, and I've shown this before, and I'll share this with you. I'll share the loan package with you, but this loan package, I've already been to see Sam. Okay. And Sam's gotten me ready. I've got my tax returns and my financial statements. I've been interviewing bankers. I found a banker that likes me. The banker's got all my stuff. They've already got it. They've got my tax returns. They've got everything. This is just about the property now. And in fact, they've said this deal is, I've talked to them about the size of this deal. They've said, yeah, that's about the size we want. Yeah, we want some loans in that area. This is a low income area, and they needed you know, credit. They needed to invest in this area because they needed credits. Okay, it's called CRA. There's a reinvestment act for credit reinvestment act, because they would need credits in this area. So all of that's already been done. So I'm going to show you this package. This is 2 pages here. So the front page, there's my logo. You know, there's my company, Options Real Estate, and that's the company that operates all of my properties. And that company's 32 years old. And this is Beckley Settlement. Beckley Settlement was an old school way down in South Dallas. And I called it Settlement because it was like nobody was going down there. And so here's the table of contents. This is pretty simple, right? The property, the survey, floor plans, rent roll, perform a budget, loan request. I made the ask, the zoning, and then leases. I'm not going to show you all the leases because there's too many. But here's page 1. This is from our county appraisal district. This is pretty simple. This is free. Everything so far is free. So I got this. I put a little box around the property, and there it is on the tax rolls right there. You can see it's on the tax rolls for $350,000 when I bought it. And here's the survey. So many people go to banks, Sam, they come in, they don't have surveys, they don't have plans, they don't, it's like some more of those things that you got to have if you're serious. You got to have a real certified. See, this is a stamped survey showing the building and the land. You see, it's showing everything here. And so then you got to, these are my floor plans. And in this case, in this property, I already had some pre-leasing done on this property. And so you can see the floor plans here. There's 32 units in this little building. I say little, it's big and it's little, because these spaces are very small, like 200 and 300 and 400 square foot spaces. And there's the first floor, and the green one's already leased. So this is really good when I took it to the bank, because I already had these tenants. Lenders love to have leasing done ahead of time. And so here's the second floor, not as much leased on the second floor, but you can see in this area, look at my lease rates here. Look at these 750, 500, 525. They're small spaces. When I showed this to my banker, he said, do you think you can lease this building up? And I said, I put the question back to him. I said, do you think I can get $500 for these spaces? And he goes, I would think so. I think you could get $500. My hairstylist pays $175 a week for her space, so that's a lot more than $550. So there's the floor plans. And then here's the rent roll of what's going on here at the space. Here's the suite number. Here's the tenant. So here's a list of tenants, and there's spaces that are blank, right? Here's the rate per square foot. Here's the rentable square feet for each space. Here's the term. Here's my monthly rent, my annual rent. I bill back for utilities and internet. See, I pay all the bills and I bill them back for those. But right here, this tells the whole story. See, this tells everything you need to know. A banker can see this rent roll, and this is if you have 20 tenants or 2 tenants, you need this, or 1 tenant, or 4 tenants. You need this rent roll. It's really important. And see, here's the bottom line. Here's totally what's leased and what's not leased. See, and here's my current annual income down here. Okay, nice and neatly laid out. And we're going to give you this. You can copy this. You can use it. And then here's the this one page right here says everything. It's everything that I need to say. The first section up here has got the building size. Okay, this is the potential income, what we would call the gross potential income, 352,000. The expenses of the building, which are over here, add up to 97,000, which gives me a net operating income of 255,000. Okay, and in fact, that 255,000, that income comes from over here, where I put a vacancy factor in. So you see, here's the income, the utilities they're paying me, the internet they're paying me. So here's at 90%, they're paying me 352,000. So there's my expenses. There's my cap rate. I use an 8 cap rate. It's a longer story to talk about cap rates, but a cap rate is a measuring device that appraisers and bankers use for establishing a value of a building. The cap rate tends to go up and down with the interest rate. And I would say today, and it hadn't really happened, but today, if the interest rate goes up, the cap rate goes up. And if the cap rate goes up, the value of the building goes down. It's kind of the opposite of you think. So this building now is worth $3,188,000 based on what I'm showing you. In the breakdown, I've got all the breakdown. At this case, I've got the breakdown of this is what Sam was talking about earlier, and Bernice. Here's all the construction budget here. You can see. And if you look down here too, if you look down here at the bottom, you look at this right here. See this? You see this right here? See this and this? I paid myself these. This is a pretty good income to do this little deal. So see, you got to figure those costs in there. And Bernice will tell you in some of her first deals, she had to put sweat equity in, and I've done the same. I've worked for free on many deals where I had to work for free, but you've got to make a living as you go along. So somebody has to be paid to do the leasing, has to be paid to do the construction, the management, and the development. Okay. And then here's the the most important thing. Here's a letter to my banker. Look how simple this is. This is what I need. I need $2 million. Can you do it? He said, yeah, we can do it. And it was that easy. Now here's the, let me go back. Hold on. I add the zoning onto it. They always want to know about zoning. They're always, is this thing zoned? And then what I don't have here, because there's too many pages, would be leases, with the leases that would match that rent roll. But I would give them a whole package. This package would go electronically to them. The leases would go in another package. My tax returns and my financial statements would be in another package, all electronically to all the banks right now. And you have to feed them. You have to feed bankers what they eat. See, they eat this. This right here, what I gave you and what I gave the banker to look at here, this particular banker, he could take this to his loan committee. See, he has to take this now from me in my words, and he has to put it in his words to a committee of people that are going to vote whether they do this loan or not. So if he can't explain it, if he cannot explain what I'm going to do, I will not get the loan. So now let's just say that in this case here, let's just say that I didn't have any, I didn't have the money again, like I had asked earlier, that I had a property under contract and that this property was going to cost $1 million. I call this the whole pie. Okay, it's $1 million. And Bernice said a minute ago, 25% down. That's about right today. And it's on a commercial deal, a residential. They're going to be a little bit of difference in some nuances, but generally speaking, where I'm at, you got to have 25% down of the whole thing. In this case here, $1 million is the total cost of the purchase of the property, the renovation, and all the soft costs. So we're just making it easy. I need $250,000. Well, basically all I've got is $25,000. I'm the promoter, the developer over here. I got enough money to do the due diligence, put it under contract, put the earnest money up, and I got good credit. So I got a bank to give me a loan for $750,000, but I do not have the cash that I need to put down And so I go to an investor, one similar to what Bernice talked to you about, who's got 250,000. And I offer them a piece of this pie, 50% of the pie, for putting up 100% of the cash. Okay. And so we form an LLC and we go to the title company and we close on this deal and we start construction. We finish the construction, we lease it up, and now the cash flow is coming back. Oh, by the way, when we went to closing and closed on the deal, I got all my 25,000 back. The due diligence cost back. I got, because see, that's part of that's equity. I got that all paid back to me. Oh, and by the way, I'm the leasing agent and the property management and the developer. So I get fees for all those things. So now let's look, it's now paying, it's filled up, it's paying its payments. Number one, it's paying its the debt service, the payments. Number two, it's paying the expenses, including my fees over here. So it's paying those. And then number three, it pays 100% of the cash back to the equity partner until they're paid off, and no interest. And then once that's done, we split 50-50 the profits. So here's, once again, very similar to what Bernice talked about. And we came at this in two different ways. We didn't learn this from each other. We learned it from our own, working in our own farms. Here, I got a property here with zero money into it. I own 50% of it. And, there you go. And so this can happen, but this cannot happen unless you go back to what Bernice and Sam said, and you have your act together. You have your packages, your finances together. It cannot happen otherwise without that. And so we're going to, let's see, now what we're going to do here with that is we're going to open it up with questions. If anybody's got any questions for any of us here, and then and we want to talk to you. You can talk to us a little bit about your deals. So we have, let's see what time it is right here, so we can. It is 6:41. So we're gonna talk for about 15 minutes about questions and about your deals. I'd like to hear about your deals. Try to be brief. Try to be quickly, and then I'm going to give you your homework for next week. So who's got a deal they're working on right now and ready to go?
Hey, Monty, I just have a quick question about the packet and the write-up that you did. Can you just make that pack? Is that packet going to be made available? I really like that. I have something similar, but I like yours better. So that's my only question, is that, can you make that available, or is that an option?
Yes, we are going to make it
Sweet.
available. And I think Marty's got it anyway already. But Marty, you could just email that out to everyone.
I do. And if you're okay with that, I'll download this and I'll send it out to everybody who attended the session as a PDF.
Yeah.
That's
dude,
awesome.
it's
Super
fine.
excited.
And that's a
Thanks.
real deal. You can actually look at that in 2910 South Beckley. You can actually go and look at it if you're down here in Dallas.
I'll be on it. Thanks.
Okay. Who else? Who's got a deal they're working on? Somebody's got to have something.
Oh, yeah. Did we overwhelm? I hope we didn't. Structure always made me very upset when I was.
Does
first
this make you nervous? I mean, what we've talked about, is this just like, you think I could never do this? Does anybody think like that?
It's all fine until we get to your part, Monty, and all that structure stuff. It's like that, you just have to get your head around that stuff.
Mhm. So what are you having trouble with?
Consuelo has her hand raised.
Oh, Henry, sorry.
Well, we start with Consuelo and then we'll go to you. You're unmuted, Consuelo. Go ahead. Well, did you want to?
You're muted.
She said her mic is not working.
Oh, okay. Well, put your question in the chat window. Who had the other question? Was that you, Jordan?
Yeah, I did. So, and I can follow up a little bit later if this is too much of a deep question. In terms of structure, right? So let's go back to your example of like needing 25,000 down. The goal is that the property in terms of equity when you take out your new loan would hopefully pay you some back. So I guess like, can you break down your structure one more time? I guess let me just listen to
Here.
a little bit more detailed,
On this,
because
on
I'm
this
trying to
page-
figure out. Yeah, I'm trying to figure out why
Okay.
you would give them 100% of the income
Well,
until
here's-
all the money's
Because
paid back. Like, I don't understand.
Well, go
Eh,
ahead, Mon. I mean, I
well,
did this with Martin, it because that's the deal. They're giving you a lot of money.
Here's the deal, that money doesn't come, most of the time, people are gonna want more than 50% to put 100% of the cash up. This is a really good deal because here's what I'm getting along the way. I'm getting paid all these fees along the way. Okay, so they're gonna get paid and they're not getting any, what's called a preferred return on their money. They're not getting any interest on their money. They're just getting it back. Now, Jordan, what can happen in 2 to 3 years down the road, or 4 years down the road, we refinance this deal because now it's humming. It's leased up, it's running, we refinance it, pay the equity partner off. Now we're 50-50.
Right.
You can do that quickly. So
Or buy 'em out.
I'm not getting nothing along the way. I'm getting paid,
And you're
6%.
also getting
on
a
lease.
ton of equity.
Yeah, and we're building equity too. My balance sheet, my net worth on this particular deal here went up $500,000. My net worth went up $500,000.
Yep.
Is the 100% of cash flow that's going to the equity partner part of your buyback? Like, do you ever become the 100% owner? Or is that
You can-
just
you-
that's for them putting up the cash?
Yeah, you can do this 100 different ways.
Okay.
If you can get somebody, if you can get a really friendly investor, okay, if you can get a friendly investor who says, okay, I'm going to loan you the cash, you're going to pay me back 5% interest. Once you pay me back, I'm out. You see, but he's in the investor, he or she is in the deal with you. It's not a loan. See, if they loan you the money, if the investor loans you the money at 5% interest and they're not in the deal, the bank's going to see that as debt.
Right.
Okay, and that's not going to look good on your debt service. coverage.
There you go. There it is. Okay.
So in this case, you could say this, very easy, Charity. Did you ask that, Charity? I think that I
It
recognize.
was charity.
So Charity, you could say this, loan me the money. I'm going to pay you back 10% interest on it. But once I pay you back, you're out of the partnership.
Mhm.
Now,
And that's what you would
that's not
clarify
in
as
the real
preferred.
world.
That's for
in the
preferred
real
interest,
world,
no?
in the financial world, the cutthroat financial world, people won't do that. You might get somebody, you got to have a friendly investor, as Bernice said, an angel investor to do that. This deal here that I'm showing you right here is a very fair deal, kind of quasi cutthroat, kind of, and doing good at the same time. Because look, I'm getting 50% of a $3 million deal. The one I did, I'm getting 50% of it
Mhm.
for nothing.
Yeah, and just to put it in perspective, so this is similar to how I structured my angel partner. And it's similar, right? I agreed with him. I would pay him down as quickly as possible. It was the start. So we would just bank money and pay, bank, pay, bank, pay. And what ends up happening is, did I really make any money for the first few years? No, but when I went to the bank to do that pie shop and they said my personal financial statement includes the portfolio I have with this guy, they're like, no, it's like a no-brainer, right? So sometimes you have to make, I don't want to say sacrifices, but maybe that's the wrong word, but you got to remember it's a long game. So some of these deals, if you can do them and they make sense for you now, it may be worth it when you think about the long world, the long view. And Jordan, I know to your point, it's hard. You want to make money. You can get paid leasing fees. My pie shop every month pays me a management fee. Every month pays my company a leasing fee. We, really not development fees because the project was so tiny, but didn't matter to me. We were working it out. So, don't be afraid. It might, when you see $1 million sitting out there, you're like, that's a lot. But really, truly, most things in South Bend, especially in the beginning, are a lot less. Can you find somebody with $100,000 to help you do a $400,000 or $500,000 deal? Sure, absolutely.
The numbers, don't be afraid of the zeros. The zeros are the same, whether it's 50,000 or 500 or 5 million.
Right.
It's all the same.
I was going to jump in and kind of tie that in. I also see Marty, you've had your hand up. This is your webinar, so feel free to.
Yeah,
jump in.
I know that. I partly,
Questions and
it's partly just to remind myself, but why don't you jump in, Sam? And then Consuelo was able to put her question in the chat window.
And
So
I was actually going to answer that too. So one, I think Bernice's Pie Shop is probably a great example of like price points in South Bend too, if you're looking for your first project. And so I think on this call too, it's hard because there's some of you that own 30 homes and there's some of you that maybe don't even own your own home yet, right? So I think we've got people at different scales. So I think part of it is trying to figure out scale here. The other one is how do you build experience? So I would say the example that Monty's done here, right? He's got a long track record, right? He can walk in and say like, I'm going to guarantee we're not maybe losing money because I've been doing this for a long time. You're probably not going to find a deal like this for your very first deal, unless it's with somebody you just know and is willing to kind of take a risk with you. And I think it's hard for anybody who's getting into this work to think about the potential of losing money, but that's what the investor has to think about, right? So the investor's like, if this goes belly up, like I might lose my funds. So that's why often when you're earlier or have less experience, they're going to charge more interest, or they're going to want a faster repayment, or they're going to want a different equity structure, because you've got to earn that trust to develop that relationship. Is I think is key. I was going to maybe ask that could be something, Bernice. I'm going to jump in on this other question here. But thinking about how you found your angel investor, it isn't, and that was part of why I was going to answer a little bit on Consuelo's question, is that I think that's the challenge, is there isn't just a list of like, is there a list of local people who are billionaires that might want to give us a cheap loan to do good work in the community? And so I don't think that generally exists, because I think most people aren't looking for ways to do that. People that are doing the work have to go find them. In my experience. And so I think that's part of a way that it's a matchmaking thing. There aren't billionaires just sitting around like, come and ask me for money and I might invest in your project, but you can connect with them in other ways. I joke my experience locally in South Bend, having done fundraising for 10 years, I know a lot of people that have wealth. I know what motivates them to give or what they care about. And that's the relationships that get built, saying, hey, you really care about the homelessness issue. Let's find a way that we invest to help that. Or you really care about this neighborhood. Let's invest in this neighborhood. You care about affordable housing. And it's the same thing, almost like working with a bank. Don't bring an investor a project of things they don't care about. Like, do you care about investing in restaurants? Do you care about housing? And then they'll say like, yeah, I'm not interested in that. Or, you know what, that's something I really care about. Let me see if we could do some type of project together, is a way to develop who your investors are.
All you got to do is take a zero. These numbers are the same, whether it's 100,000 or 1 million. Just take a zero off. It doesn't matter. So it's the same process. It's the same things that happen. If you it may be you got to do the work. You got to do this work. And billionaires, by the way, are the worst investors you can possibly get. You know why?
1000%.
They have gatekeepers and attorneys, and they want preferred returns, and they want all these things. The best people to get are wealthy baby boomers, the richest people of all time, the people that maybe have worked for the car companies or Exxon for 30, 40 years. They got a couple of million in the bank, they're your local, they're looking at their life right now. They're ending their life. They're wanting to leave a legacy. They realize that cash is going to become dust the day they die.
Yep.
They can now you can appeal to their sense of a nobler motive. You can appeal to them for that. And you're in asking for your fees too. I saw that in the chat box, and then let Bernice talk. Ask your fees. Here's what I tell you to do when you ask for your fees. When you're talking to your partners, okay, and your investors, you look them in the eye and you tell them what the fees are, and you don't blink, and you don't apologize, and you shut up. You say, this is the facts. I get 6% on my commissions. I get 5% on my management fee, and I get 5% for a development fee. That's how my company operates and how I make a living, period, end, done. Don't apologize. Okay, now it may be you're the manager of the project and you're going along and it doesn't have the money to pay you. Okay, now you got two choices. Make a cash call, means tell your investors you got to put cash in, or you book it. You put it on the books, and later on, when the property has cash flow, you get paid first, before the investor gets paid. Go ahead, Bernice, you had something,
No, Sarah asked if you book it, do you get interest on the booking it?
I mean,
I
I
guess
don't.
it depends on your, I don't, but it depends on your structure. You could,
I don't, because I take responsibility for being the one who's creating the cash flow. And if I haven't created the cash flow, I'm not gonna, it's kind of a conflict of interest, I would say. I'm the one responsible for creating the cash flow. If there's not enough cash flow to make my fees, then we got a little bit of a problem here. So yes,
And
I probably wouldn't.
I wanted just to say what Sam, people think it's really hard to find investors, and it is hard. But when you put yourself out there and you need to be honest with yourself and realize the asset that you are. For me, I said, I am a young female in a dude's world. And I said, these guys are all doing this stuff. There's not a single person in Buffalo with lady in Buffalo doing this. And that's not super true, but I wanted to be like a strong female developer. And there were people, mostly men, frankly, that were like, I want to invest in her because they wanted to put their money where their mouth is. They wanted to commit, right? And then there's other people like ladies who were like, wait, I made some money, and the only person in Buffalo is that I want to support is this woman because I want to support women, right? So I wouldn't be afraid. I would just know who you are and what you can bring to the table, whether you're a good construction person or deals or whatever, whatever your role is, because there's going to be people around you if you do good that want to lift you up in that process. And Monty's right. The richer ones are actually the more annoying investors. I will tell you that. The easier going ones are the ones that are just your boomers that want to do good. I know it sounds weird, but it's true. Anyway, you want to have homework, Monty?
Hold
So
on,
many of them-
Mary Jo has her hand raised. Why don't you unmute yourself?
Yeah, many of them,
Question.
So it's
Many
not
of
really a
them-
question. I'm just want to reiterate what everybody's saying here. One of the things that, as far as these investors, people with money and stuff, they don't have to be people that are rich necessarily either. Some people may have
Right.
that $20,000 that you need to put down or something like that. And they want passive income. And in order to get passive income, they have to invest in somebody else that's doing it. They can't touch the project, especially if they're using some like 401k or IRA money. It has to be invested in something passive in order to be considered an investment. And so there are definitely people out there willing to do that. And I did do a deal where I had a seller that just wanted cash for the property, and I'm in a network of real estate investors, and we have these exchange meetings, and they were putting up the money to purchase, to close, and they're splitting it 50-50 with me, and I'm giving them most of the monthly cash flow, and until it's cashed out.
Yeah,
But it does work.
keep in mind, keep in mind here on this pie right here, this center line, it could move over to one side or the other. See, this could be 30, you got to be creative. This could be 25%, this could be 75, this could be 70, that could be 30. Keep in mind down here, 100% of the cash flow goes to the equity partner. It could say 70% of the cash flow goes to the equity partner. See, you got to learn your people. You got to, just like Mary Jo, she knew her people, and your people. And that's, so this, okay, nothing is absolute that we tell you. Okay, there's always your own twist you can put to things, but what I don't want you to do, if you will, is make some of the mistakes I did in the very beginning about giving away everything just to get a little bitty piece of the deal, because I did that. And I'm looking back, I don't really regret it, but looking back, I could have gotten a lot more if I would have had somebody like me telling me what to do. I got a
And
lot
people will
more.
offer you 10% and you'll think that it's a good deal to take it. And
I never owned anything. Bernice,
Right.
Bernice and I, and even Mike Keene here, we'd never owned anything. We didn't know.
Right.
We didn't know.
Mhm. Okay, you want to talk to homework? It's almost 8, so I don't want.
Anybody? Okay.
Definitely
Do that.
homework time.
Okay, here's what I want you to do. Now, last time, one of the homework items were to talk about your resources, what you're starting with. Are you starting with this full or part-time? And then you can also remember asking family members and asking people if they know of anybody. Here's one thing I like to do in asking people about money. I like to say this. Do you know, I would say to Mr. Mrs. Banker, Miss CPA, Mr. Rich Guy or Rich Gal, do you know of anybody who might want to invest in my pie shop in Buffalo? And that takes the person you're asking the money off the hot seat. And they're going to say, well, I might be willing to do that. Or they're going to say to you, yeah, you might ask old John down the street or Mary. So here's what we want you to do. Finding banks. I want you to list all the banks. If you know, those of you that are serious about this, you'll do this work. Those of you who are not, you won't. Some of you will still be able to do deals. Some of you will be asking how you do this deal that's too complicated, because these are all simple steps. Everything we're giving you in the homework is not hard. It's simple things. These are the things you got to do to get to the point of where Bernice and I and Mike are and others. So list all the banks who are either in your farm or loan in your area. See, there are banks that loan in South Bend that are not in South Bend. And then what you want you to do is to interview 3 banks. And I'm giving you the questions to ask them to make it easy. You can ask them your own questions. You can read the website. You can ask them their questions that you already know. So you ask them this: do you make investor real estate loans? All right. Do you make owner occupied loans? In other words, if I built a house for somebody, would you finance them? If I built an office, an old building for a dentist, and I'm selling it to the dentist, would you finance the dentist, the owner occupied? What are your loan limits per borrower? Now, all banks have loan limits I have some little banks that have a loan limit of like $3 million. You know, if my loans end up to 3 million, that's all they can do. There's banks that are even smaller than that. How does the loan process work? If I give you all the things that Sam's talked about and Bernice has talked about and this, how does it work? How long does it take? What does it mean? What are your terms? In other words, what's the equity? That's the down payment. Down payment is equity. And if you want to get sophisticated and know what, you want to talk to them about equity and not just down payment. So what kind of equity are you going to require me to have in this project? Can I use my land that I already own as equity? How would you value that land? What is your interest rate? What is the length of a loan? Because in these commercial loans, you remember that some of them may be 20 years amortized, but they're a 3 or 5 year loan. I heard Bernice say earlier that she had a 5-year loan coming up. She has to renew because see, she's got it amortized longer. So what are the lengths of your loan? What do you need from me? What all do you need from me? It's just what we started with today. Once I make a request, what happens? What is the timing from start to finish? How can I get a pre-approved letter from you? I need a letter. I've got to have this letter before they'll take my contract. Okay. Finding investors. We're not going to go deep into this. I want you to focus on the banks. And this is a little bit about, Bernice didn't know I wrote this, even this second one down here, and you could have said coffee or beer or food. But ask your friends and acquaintances if they know anyone who might be interested in investing in local real estate projects. Period. I didn't know people with money. I didn't grow up. My mother was a telephone operator. My dad was a carpenter. They didn't know people that had money. So ask your friends and acquaintances. And I've got some great investors, just like Bernice does, that have been with me for many years that I got through a CPA. And then find one investor to have coffee with. Don't ask them for anything at first. Just ask them what they look for. And I would say this investor, don't go find the big time investor that everybody uses in town. What you want to find is somebody that just retired from the university, somebody that just retired from Exxon. And that's all the first meeting is for, is just to get to know them. How do they think? What do they talk about? Get to know you. So again, we talk about a lot, make friends when you don't need them. Okay. You're doing this all the time as a small investor. You know, I like to buy people coffee because if I don't
Mhm.
like them, I can leave early. If you get further down the road with them, like Bernice has got, you take them and get them some chicken wings so you can see how sloppy they are. So you know they're human, just like you. Just like,
Yeah.
and so this is what you need. This is what I want you to do for the next meeting. Interviewing bankers changes the whole equation. That's not what happens. We usually go and beg for money. Don't
Right.
go and beg for money. What else, Bernice? What have we forgot?
I was just gonna say, make your friends before you before you need them. That is a huge thing. You know, when COVID struck, I was the first application because I had 20 employees at the time, and I was really worried because I had a very good relationship with my local bank, Evans Bank. I was the first application that because I called and I had this direct line all the time. And they're like, don't worry, it opens Monday morning. We'll be calling you at 9:01 a.m. I'm like, okay, you know. So for the PPP loan, but you know, that like really truly like make your friends and it, even not even just banking, it applies to anyone and everyone you can ever imagine. Your building inspectors, your, you know, your city people, the Martys of the world, the Sams of the world, all of those people are important and they're going to want to do more for you the more they know you. And you know, that's so critical. And the longer you're in this game, the longer you realize how important you'll realize it every single day. Wow, I'm glad I have this social capital with this person or this person, or I randomly helped this person, and it comes around to you. And it's not just banks, but it has a lot to do with banking and money.
Yeah. You know what? Here's an interesting thing that happened to me today. Dallas Capital Bank, one of my banks, sent me this really nice letter that said, we value you as a customer. This is today, just came. We value you as a customer. We want you to know that we are solid and we have not invested in any of these weird things like the Silicon Valley Bank did.
Yeah.
We didn't do any of this stuff. We're solid. We're making loans. Come borrow money from us. They need to sell us money.
Yeah.
We have to become attractive. We become attractive by doing the things that Sam started off talking today. And you know what you have better than any other place is you have a guy named Mike Keene who followed these principles starting back in 2016 or before that, who saved his money. He's one of these baby boomers I was just talking about.
Mhm.
He worked at the university, him and his wife, they saved their money. They weren't billionaires, but Mike Keene, because he saved his money, he could invest back in it. He could have invested with you. In fact, Mike Keene has invested with several people in South Bend and other things.
Mhm.
He's one of those guys that's done that.
Yeah, and having a resource like Mike, but also with Sam. Sam, I hope that you guys really pick up the phone and call Sam because, you know, having that person that can link you to potential banks, potential, you know, all we want is our allies in this world, right? It's kind of a lonely thing to work in real estate, even though you're surrounded by people, right? Because you have somebody like Sam, you know, that can help you, and I hope you really take advantage of having him around, you know, around in this world. So.
This was a really great session. Bernice,
Thanks, Marty.
Monty, and Sam, thank you so much. This was just
Mhm.
chock full of super great examples and vital information. So this is really, really fabulous. It is 8:07 already, and we
Yeah.
are really hard to end on time. I see Monty's put a teaser up. Our next virtual session is April 19th, so you can mark your calendars. For what will also be a really great conversation about legal and accounting. It doesn't sound super exciting, but as we all know, critical to your success in the future. So hopefully you can join us on April 19th. Monty, you gonna say something?
Oh, yeah, I was just say this. You want to be attractive? Have a good lawyer and a good accountant. You're going to be more attractive.
Mhm.
When your accountant writes that letter to the bank about your financial statement, when Sam gets that letter that's written on your accountant's letterhead, you're going to be more attractive. The laws of attraction are real.